Hello everyone, today is November 15th. William and myself were extremely excited to conduct this complimentary session of our ongoing Monday tape reading class. William, how are you doing today? And let's just jump right into this. What could we expect from today's sessions in your opinion?
Well, it's very interesting. In fact, because I was just looking on the 60-minute time frame on NASDAQ, and we're holding basically backing up action after the retest. So, and it's been successful at this moment in time. The bar's just printed. So further up, maybe two things here. Either one, do a little bit of testing, or we're going to have continuation. Which should take us back up to this. Well, we can have a look.
Yeah, we'll definitely discuss this. I mean, so for the structure of today's class, we're going to discuss the markets in depth, as usually that we do. Then William's going to show one of his trades in S&P 500 E-minis. And then after that, we're going to go into the exercise. And that's usually kind of like what we do with the tape reading lab. And it's always a discussion between William and I, and we just kind of like go into what we see on the chart. And William, I mean, like we've been doing this for a while now. It's been like what, almost a year? Yeah, this is
we're
session
coming
number
up to
41.
40 plus sessions. Yeah.
So let me ask you this question. What, from all of these sessions that we've conducted together, what kind of message would you like as a benefit as to why do you think people should be joining our session here? What's your biggest thought on the benefit, the value for our students?
Well, I think the value or the biggest benefit is for the students to benefit from viewing the lens of the market through two very well experienced Wyckofians. And although we understand each other's concepts and principles, and we share them from Wyckoff and the work that we've worked on and improved ourselves over the years, but it's our application is somewhat different. And I think that's very important because, as you know, Roman, we can teach all the principles and concepts, but applying it is kind of the secret. It's kind of the key to becoming a successful trader, because you're not going to become, inverted commas, a cardboard cutout. And I think it's of great benefit to see how we navigate the markets and how I think we also complement each other's work in a way as well. And we open each other's eyes to perhaps framing, the context from the background conditions slightly differently. I think that, for me, is the biggest takeaway. And of course, you always share some golden nuggets as well. I'm still learning from these sessions, which is fantastic.
Yeah, we always do. Yeah. So it's kind of like, I mean, like if I would just summarize, what is it that you guys do, during these sessions? We just kind of immerse ourselves into chart reading. And when we say tape reading, it's actually not the actual reading of the tape with, like some of you might have come here in anticipation that level 2 is going to be explained or anything of the sort. No, we actually use tape reading from the chart. So we are reading the tape from the chart. That's what we're doing. Okay, so for those of you who is going to be interested after this class, we do this every Monday from 9 to 10:30 Pacific. We're going to have like a 2-week break during the Christmas and New Year. The course is $125 per month. We usually discuss current market. We might go and just discuss, some of the trades that we've done. Chart reading concepts are being discussed. Then absolutely some kind of exercise, because both William and myself, we believe in practicing it, almost each day.
It's everything. The practice is the core. I mean, for any endeavor, for any industry operating at the highest level, question. practice is no question at the highest
Yeah, I think
priority.
that's what like fundamentally is missing, from the
Yeah.
education about the markets, because everybody's just like, give me more knowledge, knowledge, knowledge. And I always tell my students, like, knowledge is not the skill. Like, you you can't
No.
really make money if you have knowledge but you don't have the skill. Well, anyway, students' questions are somewhat limited during the sessions. We kind of like forget that we even have the audience sometimes. Hopefully that will become evident today. But
Yeah.
I think that today we'll entertain some of the questions.
Yeah, and I'm going to put it out there, slightly outside of my comfort zone. I don't trade meme stocks, but I'm very much looking forward to that
Yeah,
exercise. That's for
so
sure.
for today's exercise, we're going to discuss AMC. And
Mm,
we'll be very realistic as to like, because neither of us have traded this stock, but we'll
no.
just kind of like give you maybe some highlights of what we would be paying attention to if we would be interested in trading a stock like this. But we usually start with the market outlook. And William, the first question for you. On the top, there are four major indices. So what do you
Mhm.
see from maybe like a short-term perspective? Because obviously the long-term is just all up. The intermediate is up. So where are we with the short-term
Well,
picture?
well, I think the picture becomes much clearer on the 60-minute timeframes, and you can see the difference between the relative strength between the indices. That, for me, is, I mean, this is showing kind of decent strength between the indices here and the S&P 500. In fact, look how far we take note of this. Look how far we've come back to
Mm-hmm.
test into the original breakdown bar here, which takes us to new lows. Um, yeah, this is the all-important bar for the S&Ps to overcome. We don't technically upthrust here because we don't break above the highs here, but there is a price rejection of sorts, and this is the buying. Oh, sorry, should I say the selling that has been met with. And of course, if you just draw this across here, we do actually penetrate support, but we do have some buying at the lows here. But again, what for you is the most important bar for me out of this area over here, Rowan, is this bar. We don't, if
Mm-hmm.
this market to continue south, it needs to overcome here. But at this moment in time, we dip down into around 50% of this bar.
Mm-hmm.
And we found a little buying, not the best buying in the world, granted. However, we just need to see the how this market evolves for the rest of the day.
Mm-hmm.
But relatively speaking, I think the S&Ps is showing slightly stronger than the other indices. That's for sure.
Mm-hmm. Yeah, that's an interesting question. I mean, you're mentioning break out and break down bars. I think those
Yes.
are the bars of always of interest to us.
Yes.
Let's kind of like talk about these concepts, and that's what we usually
Mm-hmm.
do, guys. Like what we see on the chart, we discuss. So I think that if we would look at this whole picture, and we would say like, what are the most important bars on this chart? Obviously, the ones that are highlighted. Why are they so important? Well, look at how they are breaking out or breaking down certain structures. And
Mm-hmm.
they define the levels where the price should go and retest the price levels that needs to be committed over or under. So for instance, starting with the first breakout bar, number one, what do we see here? We see a very good extension above the resistance. So that just tells you about the strength and potential continuation. So already a trading decision could be made right there after this type of bar and after the test that is holding really well and it's upsloping. So there is an idea of the continuation. So here's your trade number one right here, just on a very, very short-term basis. Then the second scenario here with the breakdown bar, we're seeing how what should be a structure of the continuation is actually not. It's broken down, and we see again some kind of healthy extension, not necessarily what we've seen here. So we're maybe like thinking, okay, well maybe the reaction as a continuation is not going to be that strong. But the test of this, William, is kind of favorable for continuation. It doesn't really intrude a lot
Yeah.
into this breakdown bar, maybe like into one half. So in the
That's a
WTC, yeah. Mhm.
Yeah, sorry, that's the second part of the puzzle. When we have the breakout bar, the subsequent testing, like here, we're testing higher. Look how far we don't, we do not retrace into this breakout bar. Here, we don't retrace that deep, around what, 25, 30%. And again, this is exactly how we analyze. But look how far here, Roman, we can see we come up and then we're holding higher lows and then we break out to the upside. It's just by understanding them, building those pieces of the puzzle together.
Also, William, I mean, like it's kind of interesting how one of the big dilemmas for students and traders is combining multiple timeframes into like one picture, one cohesive analysis. So I could even see this here because as we are waiting for the test of this bar, I mean, there are multiple tests here for this first breakout bar. The first test is more local, right? So it just creates kind of like the testing right after that breakout bar, and it just suggests strength of continuation. But there is a global test here for that bar also, where the price comes to this level. And look at this, guys, how it's starting to hold here, right? So we see some demand here behind the increase in the volume signature. So the downward effort is increasing, but yet the downward result is stopping around this bar. So that's a very, very significant, look for us, where we are after the stopping action, we have some kind of period of testing as well. And then what do we see after that? So this breakout bar negates the last breakdown bar, and that comes after the stopping and after the test. So that suggests a continuation. And this is William where you started, right? So you started with, okay, well, we came to the high of this breakdown bar number 2, and then instantly we have some kind of sell-off. So what's your take on this? And obviously,
which would be expected. It would be expected.
Should be expected, but then again, we have like a plane to 2 bars right now. This is playing as the resistance. This bar is playing as the support. So I would argue that just based on this, on kind of like the confluence of 2 forces, which is the supply and demand on that breakdown and breakout bar at the same time, we kind of might be in a situation where both forces are condensing the price and maybe like, some kind of testing as the range. What do you think?
Yep. So I would, we can see that we've held here. We close off the lows. Okay, so there is an attempt to hold exactly where we should. It's not exactly where we should. That's incorrect. The market has the right to come back down here to test, because this was the last kind of significant support level, and this breakout validates this level. Ergo, we can come back down here. But holding here in the top of this bar is additional strength if we get upside continuation. But the fact is, at the moment, Roman, we have found buying here, and we are testing in the upper range of this bar, which is bullish. But now we just need to see, what I need to see now is continuation. I want to see either a lack of supply, or just for the market, just to overcome, this down bar here. If we're going to compare, Roman, and we should always use our comparative and relative analysis, this selling here is definitely better than this buying, and is certainly increased over this last reaction here. So if we compare the reactions, that's number 1, this is number 2, and this is number 3. So we can argue that definitely the sellers are gaining traction. The quality is improving. However, this is the largest structural area here for the market to find selling. I mean, over here, this is a resistance level, and the fact that we can't react here and we break on through does show strength. But then we come back to test. This was resistance as we break through. This is support, but this rally from support isn't the best, and now it's met with better quality selling. So, there is definitely a pool of buyers and sellers in this area. And this is where the artistic element comes in here. We have these areas that we're working with, Roman, and we spoke about that. There is definitely buying on this bar. We can see this as it reacts into the top of this bar, yet it has the right to react down to here. But I like the fact that it is trying to hold here, but at the same time, we can see that the quality of selling is getting better, is increasing. So there is kind of a mishmash. There's no clean read here. However, I would say structurally and the way that we are coming down with sustained volume like this, Roman, I think odds favour that we may come back down to test this level, which, yep.
Yeah, well, finish your thought.
Yeah, well, which kind of negates, and if we do test here, we kind of negate the strength of this bar if we start closing under here, and therefore the sentiment will look increasingly bearish then.
Okay. Well, let me give you a different perspective here. So, for instance, let's go to the high time frame, because we started at the lower time frame, but I mean, let's just kind of repeat how we got here. So we're seeing a really good rally off the beginning of October low. Our comment here was that we're not going to go into a trading range. So we're not going to have something like this. We're going to get out. And the reason why we did, we called it is because of this area right here. The increase of the supply was somewhat minimal and much, much smaller than we've seen before. And then the result of that presence of the supply was also minimalistic. And it also has been occurring around the mean of the uptrend stride. So that was all suggestive of absorption at the higher level. And instead of going down into continuation of the trading range, suggested continuation to the upside. Now, as we go up, we see a slight acceleration in the price here. And then we see this bar right here. So this bar is very interesting, because it has that presence of supply. We see that from the slight increase in volume signature, and we see in supply tail, and we see in how, for the first time, result to the upside is starting to diminish. And this is, William, kind of like a very important concept that I'm discussing with my practicum students, more advanced students, is that the downward result could be visible in the upward result as well, or rather than like a diminishing upward result. So here we kind of see exactly this, where that upward result is starting to diminish slightly. Then the next bar is even more telling, because demand signature here is decreasing significantly, and then we know that bars are exhausted. What are they exhausted? They're exhausted after a small battle with the supply that occurred right there. So now we're in this period of inactivity, and from there, supply is starting to increase. So our comment here was, we need to have some kind of change of behavior bar. So what is a change of behavior bar? A change of behavior bar is something that's going to reverse the last attempt to commit to the upside. That's number one. Secondly, where supply is going to increase significantly, and we see that. And then once we have the change of behavior bar, we would be thinking like, okay, maybe this is a climactic action, maybe this is an automatic reaction of some sorts, and we need to assess the character of the move. So it's kind of interesting to me, William, that now we have to overcome this high. We can't commit above it yet. So technically, we're kind of in the downward swing, which has a very, very high type of test. And this bar needs to be reversed in order for us to say that, okay, we're going to continue to the upside.
Indeed.
So that's kind of like on the very, very higher time frame. And what's important also is just to understand what's going on with other indices as well, because S&P could be outperforming, as William was suggesting. I mean, look at NASDAQ. So just a small tail instead of a much larger tail. Look at the Russell, just a small touch, and look at this reversal right away. So there is just some weakness there for sure.
Yes.
Then on the Dow, this too is a combination. We're not even touching that. So I mean, like I would say, William, that after such a strong rally, the weakness is going to come reluctantly. So there's going to be some kind of selling, but because there was so much strength, that weakness is going to still be perceived as strength first. Kind of like this attempt of picking up the value, at the initial drop, and then boom, I remember Friday was actually really, really good day for me. It was the hedge fund, just because of how the stocks were picked up, at this level.
And I think it's important to remember, because the buying has exhausted. Okay, I mean, there's no overt price action up at the highs here. There's no real climactic, per se, ending action here. That when the market does have a chance, or when the bears do have a chance to, exercise their legs, it doesn't need a lot of volume to push because the buying is exhausted. And I think that's important to add into people's analysis. We don't need to see the huge volume on the widespreads coming down when the buying to get to those levels has been exhausted. Okay. So if you could quickly go to the NASDAQ here, please.
Yes.
If you go to the 60-minute time frame, you can see it's actually adhering very nicely to structure. Now, this was, here we go, look. This is lovely to see. So this is where we break out here. In fact, Roman, look, we come down nice and orderly. Then the angle of descent increases, which leads to this climactic play, which of again effort versus result. Then we come up here, we hold this higher trading range, and then we break out here. Then we come up to this area. Oh, I can't draw this particularly straight. And we do up thrust in an area of supply. Okay, this big breakdown bar that takes us to new lows, and this is the reaction. Now, looking at this on the NASDAQ, this is the reaction, and this is good selling coming into this market. Now, I just said that the market was attempting to hold here, the backing up action here, and if that's so, this is the test bar thus far. I know we have another 40 minutes worth of trading, but this isn't looking good, Roman. So yeah, I think we could get a definitive answer.
Yeah, I think we picked S&P incorrectly for the bias, because S&P is probably the strongest right now, right? The Dow is the weakest, Russell is the weaker, then NASDAQ, and then S&P. Yeah, so usually when you are, let's say like you are in the downward bias, and if you look at the strongest of the assets of all four of them, you're gonna see some like, bullish picture there for sure, just because of the strength. But look at this breakout that we've just looked on the S&P. What do you guys see here as kind of like a different picture? Yeah. Look at the global test here. It actually shows as a minus sign of weakness, penetrating and actually extending below the support. So that's an element of weakness that NASDAQ is portraying much, much better. Also, if we would look at the slope, at the regional slope, because slopes always change, right? So if we look at the original slope right here, we are encountering supply right at the point where it should come at the point of the resistance. And I think this, if you're thinking that the current swing bias, as we've announced last week on Thursday, I believe, or Friday, is to the downside, then you're expecting supply to come at this, downslope in resistance, and your trade today would be to the downside.
Yeah, I mean, we have a supply confluence in effect. We have structure and we have selling emerging in this down bar. We come to support. We want to analyze the selling to support. And look, it's very good selling. We try to hold. Instantly, the test bar is now failing. It's closing under it.
And I like those failed tests a lot. Because, there are a couple of things. I mean, like when we are talking about the tests, let's just talk about the test failures. So first of all, just the structural failure itself. So structure fails. So that just instantly tells you that you have a failed signal right there. And usually failed signals are the best. Why? Because the psychology of the failed signal it works this way. Majority of the people are still in the opposite sentiment to the bias. And when they get into the signal, so let's just say after the test, we have really two good bars. So what is that going to produce? That's going to produce some buying by weak hands because they see some value, especially after the test. And then if they are in a position and if the price just goes through that area, what are they going to do? They're going to give up. And they're going to give up in bunches. And because they're given up in bunches, that could produce, some kind of acceleration. So failed signal is one of the best technical analysis signals. And then the second thing is the kind of like the speediness or the quickness of that failure. Because the quicker the failed signal comes, the faster the sentiment changes and the faster, we could have some kind of acceleration. So, I mean, to me, William, I would be just concentrating today on this area right here. How does the price, interacts with it? Because this was the last bind that needs to hold here for the bulls.
So from the NASDAQ here, as it stands, it definitely feels a little weaker, doesn't it? Again, though, we want to see the nature of this test. This is all important for me going forward.
Okay, well, we'll definitely come back to that. Did you want to show us your S&P trade first before we go to?
Yes, of course. If you just
actually, let's do the Russell first. Let's just kind of finish with this, and then we'll come back and do the rest. So Russell was an interesting case for us just because of the causality. Obviously, for those of you who are Wyckoffans, cause is an extremely important measurement of the potential effect or the potential trend that could start after
the energy built within the trading range.
A resolution of that, causality. And we've talked a lot in this class and in other classes how here we were bullish, how here we were bullish, how we were bullish on this bar, how here there was some kind of hesitation and kind of like a question mark because, of some of the negations that we had, during this period. But then absorption, grinding up further type of, approach to the resistance. And then the last time when absorption has happened on this attempt to go down and then immediate resurrection, that's the David Weiss's term, and then continuation as a confirmation. So here, William, we are breaking out now out of the apex formation. And I mean, the extension of the breakout is actually pretty nice. But the question...
And we do on increasing volume as well.
If this is a sign of strength, then what kind of backup out of the apex should we have?
Very, very well. Due to the nature of the absorption beforehand, the same call in Bitcoin. If this market has successfully absorbed through here, which this is the resolution it has, I don't foresee the market coming back to this area to test. It shouldn't test. It doesn't need to test. So I'd expect a less, here, around here. I wouldn't want to see, basically you've got it. Along this line here, which also interacts with this bar. The market shouldn't really be testing that deep from this structure here on the E-mini, on the Russell. So basically about 50% of the move, it's a standard rule, I guess. The market can react 50%. Anything above that is additional strength. Like the way we're holding here at this moment in time, that's the high, this is the low. So we're holding, 30% of the move? That's additional strength. But we haven't held successfully there yet. This bar is looking a little ominous, but we have to see how this pans out. But the volume here, look, it's not great, Roman.
Yes. So the volume is dimension, which is okay. The approach to this, right? So if we're thinking sign of strength after the breakout, so we see an extension as a confirmation, slightly diminishing spread relative to that, big breakout bar. So already we're seeing the diminishing downward result in the upward result. And then we're seeing tail, 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 tail. So supply is present. And we'll look at the volume signature. So definitely supply is present because the volume is expanding and the result is diminishing, even though that's the result to the upside.
And this would give you an indication to look for short plays on an intraday time frame when you can see this move up with this increase in volume.
And that was basically the call that we were making, that we're going to have some kind of change of behavior bar. We're going to have the reversal from the upswing to the downswing, and now we're officially in the downswing. We still need to overcome this level for Russell specifically, to reverse this downswing. And until we do, we will be considering this a downswing. I think that the main question that we are trying to address here, and those are going to be very, very difficult spots for us, because if the bias is to the upside and you are looking at the counter to the trend move, they're usually going to be going down, going up, going down, going up, going up. So kind of choppiness that's going to be persistent if the bias is truly to the upside. So I like William's idea that maybe into this bar or the actual breakout bar, the high of that, something like this. This is the area where we want to go, and not necessarily continue to the downside, because if we're going to continue to the downside, what's going to happen? Look at this scenario that happened on this breakout bar. This looked like so great because we're breaking above the local structure, we're extending, and then there is some kind of test continuation to the upside, so there is anticipation of the breakout right here, and then we just starting to collapse, supply is starting to increase, and that leads to more weakness below the low of this bar. So I wonder, like, we wouldn't really want to have this at this higher level, because the whole idea behind the accumulation is that we are absorbing supply at the higher level, absorbing supply at the higher level, and absorbing supply at the higher level. So you don't want to come back to the previous level where absorption has happened already. And that's why this bar is just so extremely important to hold for the bulls.
It is. I mean, the context is slightly different here, because when we come down, obviously, around this area, we're coming down with increasing volume, but now we're pushing up with increasing volume, and now we're coming down. But I think for me, Roman, it's the whole context of this trading range here is we have the resistance level. So the market can come down here, and then it would fulfill, if we have a lack of supply coming down, backing up action, which of course is bullish after a trading range. But I don't think if the market comes into this absorption area and we start closing back under, odds favor that we should accelerate pretty deep, because maybe back down to here. I don't foresee the market doing that at this moment in time. I don't have, I don't think the chart is displaying that, Roman. That's what I'm trying to ascertain here.
Maybe the chart is not displaying because there might be some catalyst. I mean, catalysts are always so unpredictable. So when students come and they're like saying like, okay, well, I want to predict every bar. You really cannot do that. I mean, this whole word predicting is something that shouldn't be in our vocabulary. What we should be saying really is, I'm going to follow the market. So, and that's a big distinction there, guys, right? So predicting and following the market, two different things. Okay.
It is. But as it stands, though, Roman, everything within this trading range and the way we've broken out, and we're breaking out on increasing volume, we're trying to react. We can't react like we came up. Look, we can just, it took us 1, 2, 3, 4, 5, 6 bars to the highs, and we've got 1, 2, 3, 4, 5 bars here. We're only retracing, very small amount. Yeah. And we got the backing up action to come back down to here, or potentially over here. So for all intents and purposes, I'm still bullish here.
Yeah, and that's where we started the whole session. So long-term bias is up, intermediate term bias is still up, and then the short-term bias is down. This is where we are, and
which is good because it gives us an opportunity to look for the potential backing up play. But we have all of this causality behind us.
Yes. So, but the short-term bias, the important thing right now, guys, is just to understand what kind of character we're going to have here.
Yes, that's your important question.
Yeah, the character and the extension of the reaction.
Yeah, that's it. Good.
Okay, William, let's switch to you. Could you show us your trade, please?
Right, bear with me.
I see your screen.
Okay, brilliant. From current slide, let me take this. Now, this was a very, very interesting day here, Roman. So for the context,
what was it? Friday?
ESPN Friday. For context, there is a large trading range to the left. So there is causality built. Okay. Now, what I notice here, this is the US Open. Then we come back down. Bar A, effort versus result. And this was the low. This is the support mechanism from the trading range, and this is resistance, and this is yesterday's high. So we hold here, nothing to really know. We have this little local level here, and at bar B, we print hidden up thrust here, and we do get a surge in volume. And I would expect the market naturally to come back down here to support, but there isn't. You know, there's a lack of follow through. Question mark. And we can see short of a thrust in the closes. We dip down, we dip down. You know, we're trying to hold here. Basically, there's active buying after we print a hidden up thrust, an up thrust, which is of course weakness. And then bar C prints, Roman. Look at bar C. What do you know about bar C? First of all.
Well, kind of like a local spring right there, right? Definitely some supply and demand at the same time coming in.
Yeah.
No ability to break through or commit below the support, which is extremely important. So with all of this effort, we are not committing even below support. And I like also the close, which is slightly above the low. So that all kind of tells you like there is an attempt to push the price down, but it's unsuccessful because the opposing counterforce is coming in, stopping the price from moving to the support and below it and holding. So demand is present.
Yeah, huge, basically. In a nutshell, very good. Huge effort versus result. There's an attempt to push down with an expansion of volume, and the only force that can stop that market pushing lower, breaking support, obviously, is buying. So there's a lot of buying in this bar, and we could argue that from obviously note the rally here from C to D. Look how we come out of this little tight trading range. Look at the price action coming out. So to me, buyers are now in control. You know, they've made themselves present here, and this action.
Hold on a second. Let's just approach this area because this is an extremely important area. I think this is where a lot of mistakes are being made. So let me ask you the question and lead you kind of like a question from the student's mind.
Yes.
And this is such a common question. I think that both of us have addressed this, millions of times already. Well, here is this question, William. Why is the price rallying when the volume is decreasing? And a follow-up question to that. If the volume is decreasing on the rally, again, very common question, doesn't it mean that demand is exhausted and that this rally is going to fail? Why is it not failing?
Well, the key is bar C. Piece the puzzle piece. You need to build, combine the piece of the puzzle together. Bar C here is what? Effort versus result. And we know that for a fact because of the rally. Well, we don't even need to look at the rally, but there's a huge amount of volume in this bar, and we know that to be bullish. So buyers are making themselves known in bar C, and then the rally out, we don't need to see expanding volume because the absorbed has been the supply has been absorbed in bar C. And also combine that with B, Roman. Look at the volume at B. There's volume in here. There's supply here. Granted, we don't close down weak like this, but we can definitely tell there's supply in this bar. But where's the follow through? Question mark. We don't come back down to test here. We get bar C again. Huge effort versus result. Then the rally out shows a lack of supply. That's what this is suggestive of. And two things about that, Roman, is not only do we rally out with the best buying on the chart, okay, well, from here, also we close above here. Very, very, very important. Does that answer your question? Basically, it's just by combining and understanding the bars behind this rally. We don't need to rally with increase in volume because there's a lack of supply. Volume doesn't need to increase, but we do get good firm closes, breaking on through.
Well, let me slightly expand on this and kind of also like approach this from a slightly different perspective. I think that your comment about bar number C and B are extremely valid. Why? Because those two bars show absorption. C is showing absorption at the bottom of the range and in the middle of the range. B is showing absorption at the resistance and slightly above. And that
Yep.
absorption at B is extremely important. Why? Because that capitulation bar before bar number A is the most important bar to overcome. So this is bar number B is the first attempt to overcome, that bar that comes before bar number A. And it absorbs the supply that emotionally, as a memory sponge, comes in at that level. So when we observe at C, there is a clear path. There is no supply, along the path of the rally to D. Why? Because C has produced that absorption at the bottom at 1/2, and then B has absorbed the supply at the higher level.
Yep.
And so supply is not going to be that present, and it's not like demand decides like, oh, supply is not going to be there, so I'm going to be low on the volume signature. Demand could say this. No, not necessarily. Demand is lower also because of a specific reason. Why? Because look at the climactic run to the selling climax. There is demand present there, and it exudes energy. Look through the first phase A and the initial 1/2 of phase B. There is still some absorption through horizontal price action that is happening there. Then we discussed B and C. So demand has exuded so much energy. It's not that it says like, okay, we're gonna have less demand now, and because supply is exhausted. Demand is exhausted as well, but the result to D is purely bullish, as
Yep.
William has said.
Yep.
So, and that's why demand there is just diminishing, because it's also exhausted, but it's exhausted because the price moves up because demand has won the battle of absorption.
But I really like your comment about this B absorbing the supply at the high level and then C at the lows. It's very good, and that's what paves the way for this rally, isn't it? Basically,
there is a good question here from JD. Why bar C looks it looks proportionate with effort, which is a really good comment, because I understand your level, JD.
I understand, but you need to compare it to the previous down bars.
Well, also, I mean, the support of the stopping action itself is extremely important. What does bar C achieves, JD? I mean,
exactly.
The result is extremely important, and we just basically don't see that the result has the commitment below the support. Okay, well, basically, William, the next question would be like after D. Like we've dissected it. Yeah, so we probably should move on. After D, I mean, supply is exhausted, and I would say that D turns a lot of heads, and this is where the sentiment starts to change, and that's why at E we have the expansion of the demand. So that change in sentiment brings more buyers, and now with more force and with the lack of supply, we are going to have acceleration and going through and pushing through some stop losses that also help out to extend into the high of E.
Well, I thought you was actually going to say, "Did I come in here?" Because this is probably one of your entries around here, isn't it?
Where is your trade?
No, as you know, this was a trading range, and I need to see a breakout. Even though I can read this, it's too close to this resistance level and yesterday's high. And yesterday's high, daily highs and lows are extremely important for all traders. But what do I notice coming out of here, Roman? So there's no play initiated here, even though that I know that you would jump on there. Yesterday's high here. What do you notice about the break? Look at this.
Very clean.
This is a price action aberration. Higher volume than the open. And this is a commitment for higher prices, breaking through a daily structural area. So if you combine understanding bar E along with this behind us, now I'm uber aggressive looking for.
I think this is a very, very significant edge right there. I mean, like combining all of those ideas, aberration on the volume, accumulation structure, the way how absorption has happened in that accumulation structure.
Daily level, 5-minute time frame.
Yeah, that the sentiment is going to change there, and that it's almost like acting as a failed signal, from the downward bias. But I also would add here, you know, if you would go to the higher time frame, you need to understand what has happened prior to that. William said that there is a contextual trading range to the left. That's number one. And then also think that, you know, we had this break to the downside on the change of behavior bar on the daily time frame. And then there is suddenly value for somebody to come in and to buy. So as they see that value, they're going to be a very aggressive. So that first initial push after the change of behavior bar is going to be probably like the strongest with a lot of momentum. So you anticipate that the character is going to be of the expansion and acceleration, and that's what we're seeing here.
So if this is a breakout, and now in my mind's eye, buyers are in complete control. We've broken through. It's a value break, etc. Bar F, Roman, dips down, closes off the lows, shorten of thrust in the closes. Odds favour some form of upside continuation on F. F's the buy.
And that's your entry. Yeah. So. The only reason why I was thinking that your entry was after D is because, yeah, I know how you love those type of, you know, small spread, diminishing volume after the strength type of entries. So it kind of was there, but F definitely looks, you know, kind of the same.
That's a nice continuation play. And then we get a good move up, good momentum coming in. And then look at bar G, another price action aberration, partial cover here. I don't know what that means. Look at the volume. Higher than E, spread has diminished dramatically. I mean, we could easily just come down. I don't know. So, what would your thoughts be here at G?
Well,
obviously, it's huge versus
I think your decision making at G was totally spot on, right? Why? Because the volume spike like that suggests that supply is present, and we're seeing that G as a spread also is diminishing. So the upward result is diminishing, suggesting some stopping. Stopping usually leads to a change of behavior. Change of behavior usually leads to a trading range. So now you're thinking about the efficiency for the rest of the day for your trading, and you're thinking, okay, well, there is a lot of momentum in the morning, so you want to get out before you go complacent into a trading range. But I mean, like that bar E that we've talked about and that William identified as the most important bar for the day because it changed the bias from, you know, the daily time frame downward bias to the intraday bullish bias. That is suggestive that for the rest of the day, you're taking the signals only to the upside. And G is suggesting that, well, wait. It's not coming in right now. You just have to wait for the next buy-in signal, but we might be in the consolidation for some time.
So from G, I was expecting some form of reaction, but what happens? We hold a tight train range, unable to break the lows of that bar. And as you know, that's actually very bullish. And then, then we push on up to H, and I'm thinking, okay, that's good. Perhaps we're going to get some continuation to the upside. It doesn't happen. I note this, and on this bar, I'm thinking, okay, now
hold on a second, William, don't give me the answer to where you exited. I'm gonna tell you.
Okay. Or potential add-on.
Oh, potential add-on. Oh, you were adding to that. Okay. Were you adding after H?
There is one add-on, which
okay.
I'm sure you.
Well, I was thinking that your exit probably was like after H reaction and then 1, 2, 3, 4, 5, the fifth bar after the low. Yeah, right. A little bit to the left. Yeah, right.
Here.
Either, well, I know the bar before that. Yeah. So I was thinking this would be your exit.
Well, no. Only because of the momentum. Look at this. This is, I say, if you think from a macro perspective, this is our drive up. Okay. And then the market has the right to retrace down here, although I wouldn't want to give back profits. But the fact is, we're still holding here. But what I do note, though, Roman, is, you know, we still get good buying. We still get good buying. We try to get buying, good buying. But these two buying bars are still better than this reaction. That's the important thing. And now, this is just a waiting game. But then this occurs.
Okay, so was that the exit?
No, there isn't. There is no
Oh,
exit.
I see. So you've been holding it
No.
into the end of the session?
Yes, yes.
I see.
Uh,
I mean, I see the logic of holding into the end of the session. Why? Because we are in the bullish bias for the day.
yeah. Well, but this reaction here was
Mhm.
key for me. Look, no volume. Yes, granted, it is the lunchtime hour, but buyers are in control. We've broken through daily structure. We have all of this wonderful analysis behind us. Yes, granted, we can't push on up into new highs, but it's the sellers that need to prove themselves, and there just is no supply. And then Jay here, this was kind of the cherry on the cake. This was kind of make or break. We slam straight down. We become oversold within this channel. Look at the volume coming in here. I mean, this is climactic. We can see that J clearly is climactic. And then price goes sideways. And then what's over here at K, Roman? Well, you can label this a spring, 2-bar bottom reversal, but we're trying to break this level of support on much lower volume than the anchor point made over here at J. And then, you cover accordingly. But for me, this trade is much easier than this play over here, purely because we have the context of the additional. The way I frame this in my mind is that buyers are in control. As I've said, we're breaking through daily structure on a 5-minute time frame, and I just don't see. Look at all the reactions. There's just no selling, and then the only volume to come in here is buying related. We get a fake break that ends in a spring, 2-bar bottom reversal, etc.
Yeah.
This is all very sloppy price action, by the way. This is
I think
horrible
we are talking about different styles, William. I mean, to me, when I intraday trade, my goal is just to capture like 2 to 3 major swings, intraday swings during the market. So that C to like H would be one of them, and probably K into the end of the session, or like that upthrust sign of strength would be the second one. So that's why I thought that G, J, and K are kind of like very distinctively visible Wyckoff events for us. G is the stop in action. Um, uh, um, you know, K is the spring. J is the stop in action of the mini trading range. So my comment about your possible exit after H was more related to efficiency of the trading, because you would be sitting, in this whole trade, and it's not necessarily like the most optimal thing to do, but with the bullish bias and confirming J and K, you could most definitely do that.
The only thing, if we wouldn't have broken through, it's this very strange context. I know it's hypothetical. However, if we wouldn't have broken through daily structure in this manner, and with this good momentum pushing up, then I would be prone to, as you know, probably 9 times out of 10, I would be covering on this failed attempt to break through the second time.
And that was my thought. That
and I would, but it's just due to this, just the context. Understanding your environment.
Well, let me ask you last question on this, and we're at 9:53, so we have to move on.
Wow.
So where was your exit on this trade?
The covering, well, I'll ask you, you know where. Here.
Okay.
Here. I didn't like the way that we approached here. This is if you're trading one market, Rob, unfortunately you're going to trade various markets. If you're trading markets, look how sloppy this price action is. I know that sellers need to prove themselves, but this isn't very, very good price action. Then you see the volume come on this bar. I didn't cover up at the highs here. I think I stopped out on this bar. This was my kind of line in the sand. I was watching the markets.
And see, that's why I'm kind of arguing the efficiency a little bit, because if you're covering on that breakdown bar below the resistance, then J and H, or in the vicinity there, has more optimal exit.
Yeah. I mean, if you're trading, if I was trading this solely, then I'd probably pay a bit more attention to here. But set and forget kind of stop here.
Got it. Okay, well, great trade, and I mean, this is a great example for you guys to see, how this analysis becomes, a tactical behavior in the marketplace. Where are the points of entry, what are the discussions about the exits, optimization of trade-in, and so on and so forth. So this is what we usually do in this class. So for those of you who are interested, obviously, sign up, and each Monday you'll have the access to this.
It's for me, what's important about here is understanding the 4 price action aberrations, and and contextualizing them, and what do these bars achieve by breaking through structure and ease of movement, and then knowing who's in control, etc., by slowly building that Wyckoff picture that enables us to look for either bullish or bearish plays. But I do agree with you, efficiency from a trade management perspective was not spot on, but that's okay.
Well, you've made the money. You've made money, so that's
yeah.
what
I mean,
matters.
over here is not ideal.
All right. Okay. Well, let's jump to something else, William, just because of the time constraints that we have. Okay. So let's quickly go through other
How about
assets.
the beast, your favorite, Bitcoin?
The BIST. Okay. Let's go to the BIST. Okay. So Bitcoin. So for those of you who are new, and you're not yet a part of our community, I'm just going to quickly kind of like go through the calls that we've made. So was not seeing this as a distribution, was considering this as a reaccumulation pattern until this has happened, until this failure. So the actual call to the downside was here. I thought this was a very fun call. We called like a minus $10,000 dollar day to the downside. Climactic action. Then we go into the trading range versus accumulation. Couple of signals that we gave here. So point of entry number 1, point of entry number 2. I'm still in this position. I've added to this position right here. So this was a point of entry number 2. And here is the current stride. William, I like how the price interacts with the overbought resistance condition. And even currently, it's not in the lower part of the uptrend. It's in the upper part.
You're not even reacting to the mean of the trade range.
Yeah.
It's bullish.
So,
and look how we're just coming out.
Yeah, and that all happens on the background of the all-time high. So it's a very natural spot for us to stop. This is where we need to have that pause because a lot of mean reversion trade and trades come at this level. And what is important here, again, the character, the extension of the downward result, and we don't see a lot of like bearish character. Look at the elements, levels of the supply. They're much lower than on the previous reaction. They are way lower than at the original accumulation, and that's at the new ground. So the long-term picture is still up. The intermediate-term picture, we could say that it's probably a trading range at this point, just looking at the duration. And then the short-term, currently we are trying to go down as well. So kind of like a mix here. William, so what else could we say about Bitcoin?
It is, but I think you've hit the nail in the head. Also, if you just compress the data a little, if we just take the macro perspective, essentially we're in the trading range, and we're at resistance, and this is kind of the setting that we're met with, which is very, very poor as it stands. There's nothing really more to add here. I mean, look at the way that we overcome this bar here over here as well. That's just showing strength. I mean, we have our areas of structure here to work with for sure. Here, here, here. There's so many levels of support for this market to break through. I don't foresee it coming back down to here. There's no need for it to come back down to here. Right? Of course, it can, but we'll gauge it as it unfolds. But at the moment, I'm just not seeing. I'm not seeing any continuation. Look at say this was high. Look how we come down. Come up here, we come down. We come here, we come down. We're not seeing any of this.
That's a really good point. Yeah, volatility is just so low here.
Exactly. And who needs to prove themselves? The sellers. And I'm not seeing any evidence of that. So there you go. All signs are up until.
Okay. All right. Well, let's jump to something else. And I'm kind of like trying to keep us on track with the pace here. Okay, so oil, very interesting market. I know that you love trading it. I
I'm into
love,
that.
like analyzing it. I am into a lot of energy stocks and all of that stuff. So I would probably start somewhere here, buying climax, automatic reaction, then testing to the upper level. I like how in phase B we are showing some structural strength. It's very important for the continuation after phase C. Phase C has two parts to this: increase of volatility, which is kind of like a highest volatility in the trading range, and then decrease of that volatility almost immediately, and then
Yep.
decrease of the downward result on the higher low, on the diminishing supply signature, so on and so forth. Initial momentum up, and this is where William and we've commented that that's it, we're done with
Yep.
phase C, and we're going to go up from here into the sign of strength type of rally. The test has confirmed additional absorption characteristics at the slightly upper level and suggested continuation and the breakout. And then after that, what we're seeing, if this is a sign of strength, we need to go into the backup action. So, William, I would say that we are in the trading range right now, which is
We are.
acting as a backup.
We are in a trading range. I mean, I don't like this bar here. I
Mhm.
mean, it is, if you're a candlestick trader, it's like a bearish engulfing. It does show the presence of supply here, and it is the best supply we've seen in this trading range. However, there's no real continuation to the downside, is there? In fact, that we can see that volume's decreasing as we come down here. But again, we just stuck within a trading range, bouncing between support and resistance. In fact, do we? No, we don't. It's very difficult drawing a straight line, but no, we're not near there. Is there? Can we have a quick look, perhaps, on a weekly time frame?
Sure, but remember that my charting is
Oh,
so weird with that spike. Yeah. Mm-hmm.
oh, I mean,
Okay.
yeah. Look at this. This is the rally up. Good increase in volume. We do get sustained volume here, yet an inability to push down. If you look, it's kind of effort versus result. So that effort versus result, the first question that comes to mind is this bullish or bearish? How would you answer that question, Roman?
Well, I mean, I think that long term, definitely bullish. I think short term, we still could have some kind of duration in the trading range and some volatility, because I'm also looking, and maybe like I'll come back. Let me just come back to the daily. I
Yeah.
think it's more visible on the daily chart. Um, we, the previous time when we stopped, and that stop in action started with diminished momentum, right? Then change of behavior, and then failure on the next attempt to go up. We kind of do the same thing. So here is that diminished momentum signature. That's number one. Change of behavior, and then the failed rally that we have. So these are the two analogs, and we could see how volatility could increase in this area. So
Yeah.
I'm not really like, again, that saying that I said, that statement that I said, we do not predict. Those who try to predict usually are egocentric driven traders, and they will be thinking that they could really nail each bar. And sometimes you will. I mean, like I remember my winning streaks, like like 22 trades in a row. Like, you cannot do wrong, but then you're still gonna have a loss. So, like,
That wreaks havoc with the ego, though, and the Superman
yeah,
complex.
and
Feel you're invincible.
you guys know, for those of you who are more advanced, that trading is just a mirror of self, right?
Yes.
What
All
you do
depends.
in trading is basically who you are as a person, and that's how deep it goes. We're
And
not
that's
going
how
to
deep
go
we
that
take
deep.
these lessons,
Yeah.
these sessions as well.
So
We do.
just, yeah. So just don't even try to predict. So is there a possibility of more volatility to come? Yes. We see this in the most recent historic example, analog example. So from that perspective, again, my thought is long-term up, and then
Yep.
short-term, we're in the trading range / reaction type of mode where volatility could come unexpectedly on some catalyst news and produce some kind of stupid ball like this.
what I was trying to ascertain from the higher time frame really is were we anywhere in the vicinity of high time frame structure on the weekly or monthly time frame, or have we stopped dead? Because that makes a difference.
Yes.
But we can draw upon that another time, another session.
Yeah. Okay, so we are at 10:04.
Oh, yeah.
Why don't we quickly look at gold? Let's not look at silver. And just quick thoughts here. So we've been discussing this trading range for quite some time. So it was somewhat enigmatic, to a certain degree for some time, especially after this change of behavior, the volatility that came afterwards. But I think, after that volatility, everything kind of cleared up a little bit. Why? Because basically we're going through testing here. We see higher lows throughout. And also we see how on the reactions, there is a diminished volatility, diminished result to the downside. So that is suggestive of the successful test after the, kind of like a very, very strong attempt to push the price down, like we've seen before on the previous breakdown bars. And it didn't happen the same way. We didn't see the commitment below the most important support level. And then also don't forget that the long-term picture from 2011, this is the all-time high that we overcame. It's very natural for us to stay here in some kind of trading range. But really, my question to you is more, after this testing, we are breaking out, above this sloping resistance. So we're going to hold here.
Well, it's not the best break in the world, granted. But the context to how we got there, I think we called this as well. Like the market should not be testing in here, and we do come back up. Let me just note the break. Do we get a good break? We're pushing up here, breaking through here. It isn't the best break in the world, but all of this action, we can see that from here to here to here, as you've just noted out, supply is waning. Okay. And the buying is actually, this is the best buying splurge we've had. And we're breaking through structure. We have sustained volume, good volume coming in. Look at the buying over here, much lower volume. So the question will be, we need to come to this area, which of course, if we look to the left, where is it? Here, in here, in here. We're in a very, very important, we're in areas of supply directly above. So there is a free run, I would say, to around here. Free run into this area here at resistance. I don't see any reason why. Let me just have a look. Have we cleared this bar here? Have we cleared the high of that? Or are we just approaching it?
Well, we're kind of there.
Yeah, we're kind of there. I want to see a commitment above there, and then we have a free run up, and then it'll be interesting to see how price reacts, because this is the last time we found selling that did drive the market down from here to here. So it would be natural to find some form of selling, or looking at the angle of ascent here, Roman, I don't foresee us breaking up with a big wide spread. I think there'll be some kind of absorption, some kind of reaction from here, because we'll be rallying too hard. Too much. Something akin to this. I don't think really it's contextually incorrect to be thinking that, to have this kind of move over here after coming from a trading range, I should say. Your thoughts here?
Well, I think that maybe we should stop here with our market analysis, just because we are pressed on time a little bit, 10:08. So, why don't we go and jump to our next segment of the class? So this is AMC, one of the, how do you pronounce this correctly?
Meme stocks?
Yeah, meme stocks. Okay, meme stocks. Okay. So we kind of had a plan of how we're going to discuss this. So our first analysis is going to go around the current price action. So, William, as we were discussing, pre-session, the chart, you said something which I think is extremely important. there is no selling that we see in the volume signature or in the price action.
No, no. There's a lack of supply, if anything. And again, if we just crudely just draw this, who's in control? Well, trading range, breakout, testing up, breakout to new highs again. And, you know, who needs to prove themselves? It's the sellers, and there's a lack of supply here. I don't, there's no reason here from the supply volume relationship for this market to push on higher. I don't see any distributional characteristics. But again, it's a meme stock. So all it takes is a bit of backing of Wall Street bets or
just somebody
some
coming
kind
in
of Twitter.
tweeting something.
Exactly.
And here we
Anything
go.
can happen. But as it stands, I don't think there is any real kind of bearish sentiment up here.
No, there is not. I mean, like you look at the long-term picture, it's still up.
Yeah.
You look at the intermediate-term picture, it's in the trading range. You look throughout the trading range, all of the reactions as we look, let's say, initial change of behavior is going to be, you know, quite substantially down. But, you know, those are usually, you know, how they're going to unfold. You know, those changes of behavior are going to be profit taken. And we see how supply come in into the buying, extreme buying by weekends, and that stops the price from moving further up. So that's a, you know, value contrarian sell right there. And then after that, what do we see with selling? So reaction number 1, reaction number 2, reaction number 3, 4, 5. And, you know, we see that with each reaction, you know, there's the contraction of the result, that's number 1, and then also the diminished supply signature, which continues to be so. And as William has said, yeah, you could have some kind of increased volatility behind some catalyst, but if we were just to continue in this type of manner, the price should start moving up just because the selling is so exhausted.
Yeah, I mean, when you look at meme stocks, I think the contrarian approach, if you're not involved in the front loading, you know, or your sheep buying in early at the lows, I think you need to take the contrarian approach and because it's very obvious to our coffee and I, the selling and buying climaxes on these moves.
Okay, well, let's talk quickly about the tactics, because I mean, even today, I would not be entering this position. And I have 2 reasons why. Because I want to see behind that, we're saying like, oh, supply is so low, so sellers are exhausted. Okay, guys, well, look at the buyers. What could you say about the buyers? Are they active? Are they there? I don't see that. So to me, the tactical approach to trading low liquidity stocks, which basically the meme stocks are, right? So they kind of like resemble that low liquidity environment. So the timing of those when you enter is going to be when demand starts to occur. This is a viable point of entry for me. This is a viable point of entry to me for 2 reasons. There is a price confirmation that now it starts to move in a different way. So from, let's say, the up spread that we have here, if we're going to have an expansion of this spread, that's the indication of the timing that now we might be potentially starting the move. The same thing here, right here and then here. So those were the precursors. So I usually look at both volume and price. And there is none here yet. So we need to see some kind of expansion of the demand and expansion of the upward result. We're not there, and that's why I would rather wait for the confirmation. What about yourself, Willie?
Yeah, I mean, I'm just vaguely looking at the characteristics. I could say that the buying is a little better than the selling quality. Like everywhere you look, there's just either lack of supply decreasing. You get a little surge of volume here. We get a break above here with a bit of volume, etc., etc. But again, I actually think this, how you use the confirmation, I think that's the secret. This asset class or MEMS or whatever, it doesn't work well with my style of trading. Because
and here we are discussing it.
Yeah, you need to be able to identify your edge slightly differently using the Wyckoff and I think you've hit the nail on the head. You need confirmatory signals in line with the overall, the structure.
Yeah.
Again, trading range, breakout, backing up action, apex, breakout. We have that confirmatory signal, and we're not looking for. Usually I like to trade the opposing force. If the buyers are in control and we're breaking out, we've got causality. I like to look for to disconfirm supply, to look for those lower risk entries. But I don't think this kind of chart displays those kind of characteristics, which why I think is very good to discuss, actually, Roman, because we can use our tools and we just have to slightly adapt it to trade, especially this chart. So the confirmatory signals, I think, speak volumes for entering in this environment. Like, you don't want to be playing around.
Well, William, ironically, I mean, like, I was not trading any meme stocks to the upside, but I was trading a few of them to the downside.
That makes sense, because it's easy to, yeah.
To me, it's kind of like, I think if you approach this with the price and volume in mind, right, and you could time them, and if you just like, you are the trader who's looking for those low liquidity opportunities, and when they come, you're going to have like an astronomical return in the shortest period of time. Like, great, do that. Just have this strategy, a sound strategy of how you do this, and don't like be amateuristic about that. So then you could make money. I'm usually don't look at those, so they catch my attention after the fact.
Yeah.
So what's kind of like, for me personally, the the possible play here? I usually play the change of behavior with the short-term options, and those play out so nicely, because when you see the top information, and we'll go to the 1 hour and you will see that, guys, much better. That's where you could just like really quickly make money. But again, you got to be a little bit advanced with your execution skills, because those come really fast, and you have to react really fast, and you have to react really fast on the exit as well. So those were my trades in meme stocks. But let's come back to the origin of this whole move, right? Let's talk about the original trading range right here. What are your quick thoughts here?
Well, selling climax, we come back, test. But I think this is an interesting concept to discuss. We can see that volume comes in here, well, slightly higher than it does over on this reaction here, and the quality looks a bit better. However, look at the duration. How would you analyze these two, basically? This reaction to this reaction here. Although they are shorter in length, we can see kind of the quality. This quality looks better in two, but the fact is, we hold, don't we? We hold support here. Sorry, I'll let you.
Well, I mean, there are so many bullish signs throughout the whole structure. I mean, like phase B, the ability of the price to be above the resistance in phase B is just an extremely important element of strength for me. And for us, just because we're seeing how institutions are not giving up their possessions here. Then on the way down, I don't necessarily see a lot of aggression to the downside, but the verticality of it and the duration suggests that we are going to have some kind of retest. It was not like a laborious move to the downside, even though the downward spread majority of the time, like, it was small. Then we have an aberration, then small. So it's only around the middle of the trading range where we come back below the support, which acted before as the resistance. We accelerate, and then we start to diminish that acceleration. So that still is suggestive that, okay, one more retest. And then with this retest, what we have? Pretty good rallies right here, and then the retest that also has a lot of dimensions spread into the sprint position, which is local. And those are also bullish signs. But I mean, like the question here, William, is that majority of us will not know that the stock even exists or it moves like this until
No.
we probably jump into the sign of strength high.
Mm-hmm.
And this is a big move for the day, so it will be advertised throughout the
Oh,
financial
huge.
press,
Yeah.
and so on and so forth. Everybody will be screaming, "Look at me! I made some money." So that's going to be an attraction. But to us, it's not such an attractive rally
No.
at the end. Why? Because the volume is so many times more than the preceding volume signature. So that
It's
is suggestive of the presence of the heavy supply, which should lead to a change of behavior, which in fact is going to lead to a trading range. So it's only after the trading range has developed and it shows some signs of life that we would be coming back into the stock. But before, I mean, like realistically, and I want to be extremely realistic here, unless I'm trading the stock each day, I'm not seeing this.
no, no, no. But I think what is important about this is though that if you understand Wyckoff and the principles and the volume price behavior, it is possible to trade these effectively and efficiently. And I do think the easiest play, number one, is a contrarian approach from understanding the climatic nature of the plays. And as you said, the options. Very, very good. And then also the confirmatory signals when we're breaking out of structure, like here, and here. And you're not looking for the opposing forces, but just trading the breakouts themselves and just understanding, where we're holding higher lows here. We can see that the reactions are getting less and less, and then we're breaking out of pieces. We're breaking out above areas of resistance, okay, and then buying these plays. We're not looking. I wouldn't be looking for not the high odds plays, Roman, but I think you just have to slightly adapt your technique here to trade the meme stocks.
Yeah.
And I think that's quite interesting, actually.
Yeah. Well, let's discuss something else.
From a
I mean, like,
point of view, right?
let's just say, like, okay, so we see after the fact that this is an accumulation.
Yes.
Okay, so that's point number one. We see that after the fact that this is a sign of strength, we did not catch this move.
Okay.
We see that we go into the backup action, which is basically a trading range. We see through the trading range that selling is diminishing from 1 to 2, and then in the local trading range, we're seeing again, diminishing of the thrust to the downside from 1 to 2 to 3 in its own local backup action. And we also stated that this increase in the volume signature and increase or a breakout with the price is a timing tool for us to say that now we're going to trade it. Now we're going to be extremely active. And for us to be extremely active, let's go to a lower time frame. Let's go to 1 hour. And then we'll kind of do our tape reading action sequence here. So here we are. Let's just start right here. So here's this whole trading range. I'm going to go to the latest part of it right here. And I would say at this point, I'm treating this almost like, I want to say like as cryptos. So cryptos could have a lot of those kind of like drives, unexpected drives down. And then you see that the demand is coming in significantly. So you want to come in almost like instantly right away.
I mean, this is all textbook. Well, not this is all textbook now, Roman. We got this resistance level. We look at the breakout above here. We're breaking out above here. We come to resistance. Okay, we expect a reaction. We hang around for a bit. We don't instantly react like we do up here, and then we fall. So again, that's a subtle sign of strength. We're not instantly reacting. We do gap down. We hold here. This is backing up action. And don't forget, it's going to take volume to break through. But what's happening? It's decreasing. And then we get a demand bar like this. So we found buying at support after disconfirming supply. Kind of. So when you picture it like that, our first target, well, our first obstacle, I should say, is here. So by piecing it together here on the hourly time frame, it's much more favorable for my style.
Yeah.
For sure. I think it's a lot more readable. Yeah.
I am highlighting in yellow the bars of utmost importance. So what do we see, let's say, in the first four cases? The first breakout bar, lots of volume, and then what is the follow through? So we break to the downside, we fail. The second bar right here, and you could also, do the automatic rally like this, but this one was the gap, so it has kind of like the same type of analogous look. And then we still failing. This bar right here, attempt to break above this area, and still we're failing. This is the next most important bar right here, and we're holding as a test right here, and then demand comes in right off this support. So for the first time, we're seeing some kind of change in behavior, the way how the test reacts into the body of the breakout bar. And that is extremely important. And
that's extremely important.
Yeah, most obviously, like the timing mechanism just based on the volume signature, it's all there. So from here, William, why don't we go bar by bar? So let's just assume that we've opened the position right here. So what's our next? I'm just gonna put a label here. Okay, so why don't we just go bar by bar? Okay, some supply is coming in, which is natural for the gap action here.
Yeah, I mean, we come here. This is a level of support, now resistance. Good continuation though, good volume. I like to, I mean, there is active selling here, yet at the same time, it's good to see because look at the, volatility is increasing here.
Yeah.
Some kind of down, some down bar, some kind of down bar, some continuation. We want to see a lack of supply.
I love the fact that the volume signature actually is going down relative to the previous breakout area. I mean, I think this is just an edge, that we have over somebody who is not that familiar with chart reading, tape reading, because the idea here is going to be, for those type of traders is that the more conventional technical analysis, volume needs to confirm the price. It doesn't because it doesn't expand relative to the previous breakout, and then they will not be getting into this position. To me, that's all the reflection of the ability of the demand with the lower effort to push the price into the logical structural areas, and that's exactly what is happening here. So I love those type of plays.
That's a very very good distinction.
Okay, so what are we expecting here? I mean, obviously supply tail, so maybe a little bit more.
Yeah, I mean, I'm just looking here. I see a lack of supply. I see good demand emerge. A little bit selling's emerge where it should. I mean, here, that's the first kind of place I'd be looking. So I would expect some kind of down bar.
Yeah, so supply is coming in, so we're expecting some kind of reaction here. So let's just see. Okay, so reaction starts. It's not very threatening. So we don't have the bar that intrudes into the body of the last up bar. So that's good.
No.
Next one is also very, very small, and the volume is diminishing. So we're expecting some kind of continuation of the first initial momentum up.
Well, I mean, I was just going to say, Roman, we're expecting to see supply emerge from here, especially after this bar. And what happens when we observe the quality here? I see a little dip under. It is a down bar. Volume's decreasing. It's almost want to build. Also like to add on here, but okay, let's just see what happens.
That's very aggressive, knowing you. But we got to be thinking here what? We got to be thinking that this is the low liquidity stock that traded from what? Let's say $9 to $14 in literally one day or slightly more. So you got to think about the context of the velocity with which the price moves. And that, if we're going to have more demand like this coming in, what is it going to do? It's going to break to the upside. I would just say add on the breakout right here. Like, I don't see the reasons why not. It just feels like the majority of the buying already came. The support has been tested, it's holding. So if the price breaks to the upside, it should not come back to this level.
Yeah, I mean, contextually here, this bar, we're pushing up, come to resistance, volume declines, inability to react from resistance, that's a positive. And now we make the highest close from, since we've come down here. And on a little bit of volume suggests ease of movement. I'm feeling good.
Yeah.
I think I'd expect upside.
Well, let's set on the breakout. If that happens right away or not. Okay, so here it is. Yeah, and I like this breakout. I mean, obviously, I would prefer to see more extension of the breakout bar itself, but I like how the spread is expanding relative, let's say, to this bar right here, and the volume is also expanding. So you need to have more energy to go through the areas of the resistance where supply before was, somewhat present, and you have exactly that. So,
and another piece of information as well, look at the supply, the two reactions, they're decreasing in volume further still. There's just a lack of supply here with good buying behind us. This is very good. Like, if you can understand exactly what's occurring here, you understand the supply-demand imbalances here, this is looking very bullish. Like, we can feel this, can't we? We can feel, this is going to explode. You can sense it. In two ways, lack of supply and the presence of increasing demand. It's a potent combination for higher prices.
Okay. Well, let's just say that we have two positions at this point. Okay, so just some stopping action right here as the test.
To be expected.
Next bar has no continuation, but there's no follow through to the downside. Okay, attempt to go down on low volume, so supply is somewhat exhausted, and I like this demand tail, that brings us back to the same level. So we're holding. Okay, and that's what it leads to. So I wouldn't be saying that, oh my gosh, William, my expectation here would be if supply is very strong, let's just say this, then it should take the price down.
I mean, at least the test down here, but it doesn't.
Yeah, and the fact that it doesn't, and then the volume signature actually diminishes, suggesting that, again, buying is diminishing. And yet, what do? We're expanding result to the upside. So that's, again, still looks bullish.
We got to piece this together now, I'm using, I think this feels like another buy. Because again, there's no supply here with, again, confirmation of demand. Now, I would note that the demand hasn't increased, but still much better than the selling quality.
So do you want to buy right there?
I think, we got to play the chart.
You're so aggressive today. I love that.
Well, I think you have to be aggressive with this because I think these meme stocks, they don't give you. It's not like there's no back and feel nature like the S&Ps.
Yeah, there is. When the velocity and momentum is just like astronomically high like this, then you're gonna have much more shallow backups, or you're gonna have some kind of like aggressive backups that are gonna be followed by the diminished character of the selling. Okay, well, I mean, I'm up for the next add-on, so that's fine with me. I'm still expecting, after this small pause and low demand bar, some kind of continuation. Even if we have a smaller reaction here, I still would be holding, to the whole position. Would allow the position to develop a little bit more, so my stop losses are still going to be below like 12 at this point. Okay. Good continuation. Some supply is coming in, but nothing is dangerous. Nothing is kind of like.
There's some supply coming in, but again, there's nothing. It hasn't achieved. It's still up. Okay.
Ease of movement. That. Yeah. So I mean, this is like a perfect logic behind the entries. And I know that a lot of our students and us as well. I mean, like we wouldn't be necessarily extremely aggressive in the context of a different asset, in the context of a different stock or a different instrument that would behave kind of like would come to the support right here. But this is different. The character of this, stock, the movement in the stock suggests that the trading style has to change.
It's this here, isn't it? The move from 10, you need to be aggressive.
Okay. All right. So nothing to do here. I think that at this point we neither
What we
add
noted
nor
the
we.
movement.
Yeah.
Yeah, the supply comes in on this bar, and then with lower volume, we print a bar twice as. I'm feeling very, very nice. Although the angle of ascent is increasing.
But at the same
Doesn't really
time, I
mean
mean,
a lot.
like, look at prior ascent right here.
Okay, yeah.
Right. So
Again,
we could be
pace
thinking like, okay, well, right here, the verticality was just like astronomical, right? So the volume signature was also very high. And yet we are testing and then we're continuing to the upside. So I would be expecting a test like this after this type of verticality. Plus, we need to remember like around 1820, that's our all-time, not all-time high, but significant high right here. So if we're holding in this kind of like test, which is upsloping, I would be thinking continuation. And more importantly, we could add again here on the breakout.
Well, it'd be interesting to see what supply emerges from this high. That's
Yes.
the key.
Let's do that. By the way, we're, William, at 10:35. So let's go maybe for another like 10 minutes. Let's finish this trade and then we'll go from there. Okay, so this looks a little bit short-term climactic, wouldn't you say?
Yeah, it does. But we are 18, so we're above. See, that's a commitment, isn't it? When it gaps up above a structural area, that's bullish.
And we come somewhat lower,
sorry,
right?
I thought it was 18, it's 20. No, we haven't gapped. Oh, yeah, it is definitely a little climactic then.
I wouldn't be saying like, okay, well, this is like a very much the volume signature that's going to stop the price movement, because here we also had somewhat of the same volume signature before, and we stopped for a brief pause. So, and that's kind of like what I'm waiting for, some kind of test, resolution of the test. Now, by the way, this gap action after the test suggests that maybe the entry on during the test should be during the test, not as a breakout. Because if this is a high flying stock like this, then it's going to be really, really hard to get on the breakout. Okay, let's go further. Okay, so here's our test. William, looks good. I'm just going to go a little bit faster.
Yeah. Well, so we're coming to our high now, and look, no immediate selling. That's the most important thing that I'm observing here.
Well, again, my preference probably would be a little bit of a more weakness on the test, but this is extremely bullish, so that is suggesting not just continuation, but acceleration again. We see that from the next bar. So I think on the intraday basis, I mean, like if I'm in this position already and I'm like heavily in this position, then I'm watching it like a hawk, like almost like, on the 1 minute type of structure. Which, by the way, a lot of you guys confuse, like when we show you like 1 minute charts, and the question is like, do you trade on 1 minute? No, we don't trade on 1 minute. We look at the structure, and the structure on 1 minute is going to look somewhat similar to the structure on 5 and to 1 hour. It's just going to be with more details, and that's what it is. So here, I think that expectation that the breakout trade here is possible, and then we have the gap action to the downside first. So going through this, and going through 20, I think this would be a really good point of entry right here as we're breaking up again.
Okay.
All right. Somewhat climactic again.
Definitely a lot of supply in there. Look at the volume. But still no reaction. That's what I'm noticing here.
Would you be taking some profits here? I mean, like supply is consistent here.
Yeah, but it's still not having an effect, is it?
Where's our stop loss? I mean, it's already a good trade right here.
I was literally going to say, that's where it is.
I would say probably, just even thinking about like how big this bar is, I would place maybe like 1/3 below 1/2, 1/3 of the position. stop loss below 1/2 of this bar and just take some profits. I mean, taking profits, guys, is actually really good. Sometimes we become a little bit greedy. A little bit greedy. No, let me rephrase this. Sometimes we become a lot greedy than we should be. And then, we kind of are trying to allow everything to unfold more, but, you could take
I'm a big
profits, and that's
advocate
fine.
of partial covering, as you know.
Okay,
It's
let's do
very
that.
important to create that habit of extracting points from the market.
Okay, and even if that stop loss is not, hit, move it right here, move it to 22 after
It's
that.
got to be under here now. Yeah.
Okay,
But I
but
like this move up though. Look, the volume,
what do you see?
It's decreased, but so's the spread.
Yeah.
It's still nice. It's still favorable. It's not climactic. A little bit cautious.
Well, I mean, there is a question here, obviously. There is a decrease of buying, which leads to the decrease of upward result. But proportionally to what we've seen on the previous bar, that might be okay. I think it's warranted for us just because of the verticality of the rise to move the stop loss, somewhere below the test or below the significant bar, and just see and wait what's going to happen. And I would probably just move it, maybe like half of the position here, half of the position here, just to allow it to fail a little bit if it does, but it's just so strong. Okay, next bar.
Oof.
Okay, so definitely stop loss here.
Yeah.
Okay, I mean, for those of you,
that's another 20% over or more from here to here. Oof.
Supply tail, climactic volume signatures. So I mean, like for more aggressive type of exits, here's your stop loss number 1, here's your stop loss number 2. I would just use both at the same time, not necessarily separately, but at the same time. Okay, so supply is still there. We see that from the volume, but not really damaging too much. So still could continue to the upside. If we're gonna see, we need to see, for us to exit, we need to see now some kind of change of behavior bar. So change of behavior bar will be the expansion of the spread, downward spread, and expansion of the supply. So until we see this type of bar, we're still in. It's just a matter of mechanical stop loss movement. All right, so this is interesting. What do you think, William? This is the largest down
it is the largest down bar. But the volume,
the volume is diminishing.
Yeah, the volume. Yeah, look at the volume from here to here. Yeah, there you go. From here to here, it's still not. It's not enough, Roman. Yeah, it's not enough.
All right. So just keeping the stop losses where they are.
Close off the lows. Yep.
And just allowing the price to kind of like show us what it wants to do, allowing the price either to go up like here or take us out. And the emergence of this more meaningful downward result might be suggestive. Okay, maybe we're close to the end, because this could potentially act as a preliminary supply type.
I mean, it's the largest spread we have, and that will be taken into since this run up, and that will be taken into consideration. Yet ultimately, I'm asking myself, well, there's not a great deal of volume. If anything, it's diminishing. And second of all, it doesn't achieve anything. We're not breaking under any levels. It's still not doing anything. It's still holding. So we got to pay. We've still got to have our bullish convictions, I guess, until the market tells us otherwise.
Okay. Well, this is interesting. I mean, like the last bar, let's just say like the second bar, supply tail as a downward result is expanding relative to bar number 1. And the volume signature is slightly expanding too. So we're seeing maybe for the second time here, and this is the pop quiz, where it happens for the first time, we're seeing that even though we have an expansion of the upward result, the downward result is starting to emerge on the downward expansion of effort. So it's there. Supply is present. Somebody is taking profits. Somebody is closing their positions. And that's what we're seeing in the volume signature and in the price action as well. So, William, tactically, what would we do? Stop loss below the low?
Yeah. Yeah.
Okay, for the whole position or just partially?
Ooh. It's a good question.
We could go with the true range, right? So we could do this. We could
Well,
put
the
one
thing
stop
is,
loss here and one stop loss here.
yeah. I mean, we can always. I mean, I'm expecting some form of reaction, but due to the volatility, you really want to be. You really want to manage these
Yeah.
trades very tight
Well,
because
you'll
of
have
what.
to go to a lower time frame, I would say.
Yeah, I mean, look. I mean, this bar itself, 36 to
Mhm.
28, is. That's
That's stupid. Yeah.
it is stupid.
Yeah.
So I'm extremely cautious,
Mhm.
extremely cautious. I'd be looking in at a lower time frame. I'd be looking at this action. Do I see a lot of
Yeah.
supply emerge? If so,
Probably even taking some out on the lower time
yeah,
frame.
that's it. Do I
Yeah.
see supply emerge? How are we
Yeah.
breaking through support levels? If we're knifing through like butter,
Mhm.
I'm partial covering along
Yeah.
the way.
And we'll
Because
show you
if
guys in other classes as to, how to take this profit here on the lower time frame. But that's
yeah,
probably a much more logical decision here, to take profits on the lower time frame rather than use the stop losses on the higher
oh
time frame.
yeah, I'll be monitoring the lower time frames on this kind of action. But if we combine this bar after this bar, there's definitely something's changing, something's occurring, isn't it?
Yeah.
And we want to be very
Okay.
mindful of
Well,
what could potentially occur.
let's just think that we put the stop loss below here.
Okay.
This is a good trade on its own. So I would be totally fine, if it takes us out. So let's just see where we are. Still in. Okay, and that takes us out. Would you say that this is a change of behavior and we are done?
Uh, well, I still see aggressive buying off the lows here, Roman.
Yeah.
So not as yet. What I will be doing from here is okay, definitely some profit taking. Some kind of climactic move. We see a little change of behavior between these two bars, and then we do get a reaction. But this bar, there's a lot of buying in here. So now the question would be the test. What's the test of this bar? So let's see what happens.
Yeah.
There could be a potential entry.
Okay.
Because we're holding.
William, we're close to like almost 10:50. Maybe
Oh
this
wow.
is where
Okay.
we should stop.
Yes.
I think
Yes.
that we've given, quite a lot of good information. Guys, for those of you who are interested in our Monday classes, I mean, like, as you could see, Willem and I, we just thoroughly enjoy what we do. We thoroughly enjoy each other's company. We, obviously become very good friends, discussing the markets and everything else related to that, and everything else in life just in general. So it's always fun. We kind of
It is.
get lost a little bit in our analysis and we forget that we have students in the classroom. But that's
And also
what's,
time is a factor.
yeah, but we
It
need
would
to
be
stop.
great to go through. I think it would be great to perhaps finish this in next week's episode, and we go into how we'd
Yeah.
cover on those climactic bars, because I think that's a 20-30% move. Like I wouldn't let that happen. Go against me with it. Yeah, I think it'd be important to revisit that.
All
Sorry,
right.
Roman. Continue.
Well, sounds great. And guys, again, for those of you who are interested, go to our website, wyckoffanalytics.com, under the Wyckoff tape reading live classes, sign up the landing page, sign up. And we're looking forward to working with you in those Mondays classes. William, great session. As always,
Yes, thank you very much, Roman. I appreciate it. And thank you,
yes,
everyone, for attending. It's thoroughly enjoyable.
such a pleasure to discuss the markets with you. And thank you guys for being here and for your participation for some of the questions that we didn't even, attend to. Well, hopefully, during just regular Monday sessions, we'll do that. With that,
Brilliant.
thank you so much, and we'll see you next Monday.
Okay. Take care, everybody. And thank you, Roman. Have a great trading week.
Thank you. Bye-bye.
Bye now.